Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and sidebar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was in Forex, we see a couple things. First of all, will the Eurozone be able to save Spain? Currently, the central banks have taken a back seat. They're not, creating monies to stimulate the economy, and they're leaving it in the hands of policyholders. Of course, and we know when you look at what's going on in Europe with the recent election in France, the inability to elect a governing consensus in Greece, leaving it up to politicians may not be the best thing. Here in the States, President Obama called for a slowdown in the European budget cuts on Friday. Of course, he's concerned about the spread of the crisis in Europe affecting the U.S. economy. And yesterday there was an emergency conference call on behalf of Spain, and it's been estimated. Fitch, the rating agency Fitch, estimated that Spain's going to need about $100 billion, and so there's the balance of, do you give them the money? But if you don't give them the money, it's going to cost even more money. So it's what will the Eurozone do? Of course, Bernanke testified this week, and even after the bad jobs number, of course he says we're always willing to do what we need to do, but he kept QE at arm's length. And the Fed meets next week, but he made comments about part of the weakness of the jobs was the weather. Of course, we know for the most part the weather has been warm, so that's an interesting commentary. Then we had the surprise rate cut in China to try to stimulate their economy, as the last month or so has shown slowdown in their business production. So they cut their rate. And what to watch for this week? Not much to watch for. As I said, the FOMC is going to be speaking. We got the Bank of Japan and the Swiss Bank also reading. But as I've already said at the beginning, a lot of the central banks are taking a pass on stimulating the economy with money. So it'll be interesting to see what these banks have to say. As we start out with our market simulators, the dollar, gold, and crude oil, we can see a couple things. We did hit this new high at 83.67. As you can see, our support around 82 did hold up here. We also have the 20 moving average here acting as support. So we have a new range that we're watching, 82 up to just above 83. The dollar is definitely sideways to up. And you can see really on our point of control where this 82 really held up here as support. Going over to gold, where we've been saying sideways to down. We can see our 2012 action hit a low here. All these wicks down here in this 1535 price level. We came up, got back into our range where we like to be at this 1600 to 1660. But you can see what was support here. A lot of wicks in this 1640 range acted as resistance and pushed us right back down, and now we're back in that 1600 to 1500 price level. So we'll go sideways, just say sideways on gold. We'll finish off with crude oil, which, as we said earlier, hit a 2012 low. Actually, before I highlight that, let me zoom back out. Sorry. And you can see what we were watching over here, where we got these lines that we drew in here. And now, as I zoom in, you can see what happened with that price action. We said last week that we expected to see some support here in this 80 range. We got a little bit early at the 82 price level, and now we're going sideways. So crude oil is definitely sideways to down. All right, we are going to go ahead and start off with the euro dollar. And we've talked about the strength of the dollar. We've talked about the eurozone and the banks kind of taking a sideline. And we can see here that the 20 moving average ever so slightly became resistance. Also, we have a 1.265 resistance level. At least we did see some type of bounce. We obviously have been oversold here. We got a nice W here, so this was certainly a good entry point here. But what I want to do is go ahead and zoom out a little bit. Take a look at the monthly, just so we can get a better view of what we're watching. And what we've been watching for the past couple weeks is this 200 moving average, and whether or not this on the long term will continue to be support no matter what happens in the eurozone and the euro. But you can see definitely some weakness, definitely down. And again, if we keep moving lower, we've got 1.21-ish, 1.209 as our next potential area of support. We did just get a little signal here for to consider going long, but again, that is against the trend. What about the pound dollar? Again, zoom on in for us. And you can see that the pound dollar has basically entered into our range. And now we have the, I'm sorry. Boop. There we go. You can see we've got this ultimate support down here, 1.526. We still have the moving averages above us, which is also a little bearish. But we did find a little support. Now what's going to be interesting is, and you can see it starting to happen, these wicks in here at the 1.56 price level, this was support on the way up. And now we even got a little support in here. And then this wick here from what looks like Thursday came right to it, and the sellers found value. What was one support now becomes resistance. And so 1.56 looks like it's going to be, of course, we have the 20 moving average right above it. So that's got to be the next area to look at for potential breakout to get into this range here. But I think, as I was starting to mention a second ago, on a monthly, we really see this range-bound price action between 1.53 and all the way up to about 1.63, especially for 2011 and 2012. We'll finish off with the dollar franc. Of course, we know the dollar has been looking nice. And zoom in over here. And waiting for data over here. Okay. Zoom in. Go back to the daily. What was once resistance became support. We broke right on through 9548, and then we found support here. So that's certainly very nice for our longs. We are a little bit overbought, but we came out of that, so it'll be interesting to see if we can get a hook above that. It's almost a reverse, where the pound dollar and the euro dollar were giving us some long signals. Here we're getting some short signals, but again, that's against the trend. We can start to see the accumulation start to kick in here as we got our green candle here. So overall, long term, we're definitely in an uptrend. We've established some support at the 0.95 level, 955 level. So we'll see if we can break out to new highs. We're now going to go ahead and take a look at the two watch lists that we look at each week. First, we have our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, looking for that consolidation, looking for that squeeze. And we do have several candidates that are beginning to form. We've got the euro dollar, the pound dollar, dollar franc, and then the bunch of the yens, the euro yen, the dollar yen, and the pound yen. Some of them aren't set up perfectly, but we can see the bands pinching. And so that's where we're watching for, looking for a break of the swing high, swing low of these pinching bands. As far as our inside watch list, which is our daily time frame, looking at the range and seeing if we have any inside bars, and right now we do not have any. As we come to our education spotlight, we're talking about the importance of recognizing how the emotions that you bring to trading can be dangerous and can obviously affect your profit win loss at the end of the day. So you have to understand, what baggage do you bring to trading, and not only do you bring that baggage, how does that baggage cloud your judgment about what you're seeing or what you're going to do? I know that my emotional baggage stops, and that every now and then I get into that tick by tick battle. We all do that. And so for me, it's easier to be mechanical about my thoughts, have it already put in, and then let the trade work. Let the cost of business do business. Plan the trade, trade the plan. Let the trade work out. But instead, because we have so many emotions and we don't recognize that we bring emotions into the trade, we do plan trades, but then we trade off the emotions. Oh, this is going to work. This is going to work. When you should get out. Or take my profit, when you really should let the winners run. So we have to recognize how potentially damaging allowing our emotions to rule our trading, to make decisions off of emotions, is to our profits. As always, we want you to comment, like, and subscribe. Let us know what you want to see. If you want to see more currency pairs in a video, let me know. We have our resources, our mentor sessions, our managed forex accounts, and our signals. We do have something coming up next week that I'm really excited to share with you, but you have to stay tuned. In the end, it's about having a trader's mindset built off of psychological capital to enact your trading plan, plan your trade your plan, day after day after day. Thanks, guys, and I'll see you next time.